Welcome back, everybody, to Altcoin Daily. An unbelievable thing has just happened, and I'm glad. I'll probably be the first to share with you these clips in full. So it's Minneapolis Federal Reserve Chief Neel Kashkari. This man is an American banker. This man is an American politician. And right now, he's the president of the Federal Reserve Bank of Minneapolis. He just went on 60 Minutes and he dropped some bombshells on the American people. I mean, I never thought that he'd be saying this stuff on national TV. Some of the things that he said we have flooded the system with money. He says there is no end to the amount of money that we can print. He says our job is literally to print money. After these clips, stay tuned because I'm going to talk to you about why Bitcoin is a hedge against this. Check this out.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
Is the Fed just going to print money?
That's literally what Congress has told us to do. That's the authority that they've given us to print money and provide liquidity into the financial system. And that's how we do it. We create it electronically, and then we can also print it with the Treasury Department, print it so that you can get money out of your ATM.
And then he continues this. He continues by addressing concerns. People are wondering, hey, are the banks going to run out of money? So he attempts to alleviate your concerns of a bank run by assuring you that the Fed can supply banks with as much money as they need.
I heard from a bank in our region, a well-to-do customer came in and said, I want to withdraw $600,000 of cash. Now, we can supply all the cash that the banks need to meet their customers' concerns, but it just speaks to the fear and the uncertainty that is rippling through the economy.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
Will the Federal Reserve ensure that banks have all the cash they need to satisfy whatever withdrawals may be coming?
Yes, this is the fundamental reason the Federal Reserve exists. We call it lender of last resort. This is literally why central banks exist. If everybody gets scared at the same time and they demand their money back, that's why the Federal Reserve is here, is to make sure that there's liquidity, that there's money to meet those demands. We will absolutely meet those demands.
So I really like the next question that they asked him. They asked him, what did we learn from the 2008 financial crisis? And just so you have the full picture, it was Neel who back in 2007, 2008, 2009, it was Neel who was the Assistant Secretary of Treasury for Financial Stability. And in 2008, Neel was one of the people who oversaw TARP, which is the Troubled Asset Relief Program. And TARP was the first major component of the U.S. government's response to the 2008 financial crisis. And Neel oversaw this. So what I would have hoped that Neel would have addressed in a 60-minute interview was the controversy of the TARP program. So just so you have the full picture, let's go to Wikipedia. The problem with the previous 2008 program, TARP, taken from Wikipedia, the Senate Congressional Oversight Panel, created to oversee TARP, concluded in 2009. In particular, the panel sees no evidence that the U.S. Treasury had used TARP funds to support the housing market by avoiding preventable foreclosures. The panel also concluded that although half the money had not been received by banks, hundreds of billions of dollars had been injected into the marketplace, but had no demonstrable effects on lending. Government officials that oversaw the bailout acknowledged the difficulties in tracking the money and in measuring the bailout's effectiveness. During 2008, companies that received the billions in bailout money had spent the money on lobbying and campaign contributions. Banks that had received the bailout money had compensated their top executives nearly $1.6 billion in 2007, including salaries, cash bonuses, stock options, benefits, including personal use of company jets and chauffeurs, home security, country club memberships, and professional money management. The point is that in 2008, the bailouts and the QE could have been handled a lot better, and that's something that I wish that he would have addressed when they asked him this question.
What did we learn from 2008 when you were in the Treasury Department, and how is that being applied today?
There are two big mistakes when I look back at 2008 that we made that I think are relevant today. Number one, we were always too slow and too timid in responding to the crisis. The reason is we didn't know how bad it was going to get, and we didn't want to overreact. And it turned out it got really, really bad, and the right answer should have been overreacting to try to avoid the devastating recession that we ended up happening. So today, whether it's healthcare policymakers, fiscal policymakers, which means Congress, or the Federal Reserve, we should all be erring on the side of overreacting to try to avoid the worst economic outcomes. We are being very aggressive, and I think our chairman, Jay Powell, has learned from the experience of 2008. We're moving much faster than we moved in 2008. We're being more aggressive. Is there more we can do? Yes. Is there more we may end up doing? Yes. But I think we're being very aggressive, and I think that's the right thing.
So let's talk about the economy. Are we in a recession? If we are in a recession, well, how long is that going to last? And what does this mean for the American people?
Millions of people are going to lose their jobs, and that's what's so scary about this.
Are we in a recession?
If we're not right now, we will be soon. My base case scenario is we will at least have a mild recession like after 9/11. The worst case would be we'd have a deep recession like the 2008 financial crisis. We just don't know right now.
And what's keeping us from knowing with any certainty?
Nobody knows how the virus is going to progress. How many Americans are going to get it? How effective is social distancing going to be? How long will it take the healthcare system to catch up?
Nationwide last week, there were almost 300,000 people filing first claims for unemployment benefits.
It could be 5 times that amount next week, maybe more.
Where is the bottom?
If this is a 3-month shutdown, we'll find the bottom pretty soon. If this is a year-long shutdown, this could be very damaging to the U.S. economy and most importantly to the American people.
Wow, okay. Well, what else can the Fed do if this doesn't work? I mean, you've already lowered interest rates to 0. Could we get interest rates below 0?
If the current measures are not enough, what else can the Fed do?
So there's a range of things that the Federal Reserve could do. We're far from out of ammunition.
Far from out of ammunition. Sunday, the Federal Reserve lowered its benchmark interest rate to 0. Can you go below 0?
In theory, we could. Some countries have. I don't think any of us on the committee think that's a particularly good idea. It creates other challenges for financial markets. But in the last crisis, we'd used something called quantitative easing, buying long-term bonds. We've got a lot more experience in how to do that. It didn't trigger inflation. So there are other tools that we've used before that I think we could also use again and use again aggressively.
Huh. Quantitative easing doesn't trigger inflation. Oh, okay. I thought it did. Here's the thing, guys. If governments were better, then there might not be a need for Bitcoin like we're seeing today. But governments aren't better. This is what people will come to realize. People are going to realize Bitcoin has a harder monetary policy than the Federal Reserve. And over time, as Bitcoin just continues to sustain itself, as Bitcoin continues to work like it worked last year, like it worked 5 years ago, like it worked for the past 11 years, as people come to realize this, more and more people are going to opt in to Bitcoin over time in waves. And as that happens, the price is just, it's inevitable. The price has to go up. And as the price goes up, that's going to attract more people. And this is the endless positive feedback loop that is Bitcoin. I'll just leave you with one final part of this 60 minutes interview, just a little cherry on top. But if you got value in this video, give it a like. Feel free to share this with a friend. This is a great video where people can see the problem. And then once they know the problem, then they're going to realize the value that Bitcoin has. And make sure you're subscribed to the channel for daily videos, keeping you informed on everything going on in the cryptocurrency market. I'll leave you with this, and I'll see you tomorrow.
People are shunning U.S. Treasury bonds, which are always thought to be the safest possible investment.
It is. Now, keep in mind, Treasury bond prices are still very high relative to history. They're just not quite as high as they were a few weeks ago. So they still are viewed as a very safe investment, very attractive for a lot of people. But just this fear of where the virus is going to go is leading people to say, I just want cash. And if that's cash under my mattress or in my safe, I'll sleep better at night.
What's it going to take to get the bond markets working again?
I think a combination of factors. I think Congress taking bold action to say they're standing behind the U.S. economy, the $1 trillion stimulus they're talking about, I think that'll help. I think continued actions from the Federal Reserve will help. And I think more confidence that the healthcare system is catching up to the crisis.
This past Sunday, the Fed dropped interest rates nearly to zero. Then, every day last week, it announced emergency lending programs. It pledged to spend at least $700 billion supporting mortgages, banks, money market mutual funds, corporate bonds, and lending to central banks of other countries, because the dollar is the currency of world trade.